Hi everyone, welcome back to my channel. Today I want to show you something that very important. You have to watch this video before I change my mind of pulling it down from the page. What I want to share with you is something that is an exceptional skill in trading, something that can reduce your losses, and at the same time something that I believe the prop firm people might not want you to know. You know very well that one of the rules in prop firms is they are giving you daily drawdown, overall drawdown. Now the reason for this is very clear. Some of them, because it's their money, they will not want to lose their money. They want to minimize their losses. But most of them are giving you these rules because they know something that you don't know and they do not want you to pass. You agree with me, but a lot of traders, sometimes they have their direction very clear. They know the market is going in a particular direction, but where do they enter is very key. Where do they enter? Where they enter from that will minimize the drawdown or reduce the drawdown. So they put a big stop loss, and of course, the moment your stop loss is getting bigger, if you are very good in risk management, your lot sizes get smaller. Your lot size gets smaller so that you can just be within the time frame. Now, is it possible to minimize the drawdown? Absolutely possible. That is why we do something with candlesticks that I have been telling people, try. It doesn't matter how experienced you are, it's going to help you. We do our entry from 2 minutes and sometimes 5 minutes. Many people think no, you cannot be trading long term and be entering at a 2 minute candle, at a 5 minute candle. Now, the question I want to ask you is, what is wrong with entering with 2 minute candle or even 1 minute candle? Because the same candle you are entering from, you are thinking that 1 minute candle, 2 minute candle is bunch of noise. Permit me to correct you. It is not a noise. It is the detailed activities of traders. If your entry is H1, within the H1 candle, there is 1 minute, there is 2 minutes, there is 5 minutes. That means that candle in 1 minute will still get to one point where it's going to reverse. Maybe because of my background of trading binary, that is why I understand what it is. You see, the lower time frame you go to, it's like you zoom in and see the details. I say things and many people know that there is a saying, a very popular saying, that the devil is in the details. The devil is in the details. Okay? So when you ignore details, you are doing yourself a lot of harms. So if you want to enter from H1, is H1 candle. The H1 candle will have the last minute when it will enter. Is it possible to know the last candle? Absolutely yes. Absolutely yes. And let me also say this to you. What you don't know might be your downfall. And if you don't know it, it doesn't mean somebody doesn't know it. But I know a lot of people argue, especially what they don't know. They argue, they dispute it, they criticize it. So let's go straight. Now, first and foremost, what time frame are you entering from? Let me show you something. I do this analysis. Let's go to weekly analysis, and I want to show you something. Even from the weekly, I think I should show you a little of the monthly. Look at this candle from the monthly. Okay, from the monthly candle, what are you seeing? This is a level. This is the last level candle. That's why you are seeing this green line. This green line is the last level candle. Okay, now I put it green line to show the last level candle, meaning that is the buyer's area. Okay, now let's go to weekly. On a weekly, you can see that last level here has not been reached. The last level here has not been reached on a weekly. But unfortunately, we already seen rejection before the last level. So it means something. I don't need to talk about that. The candlestick understanding anatomy teaches that. I can't give you all the informations, but this one will be very good for you. Now, we have not reached the last level. So we have something here to think about. Selah. Okay? Food for thought. Something to think about. Now, so we already have buyers entry and showing us signs, but we have not reached that level. But buyers already entering. Now, that is weekly. So what are you going to do here? What decision are you taking here for you to think about? Now, I know what I want to show to you. I want to show you how to reduce drawdown. Now, you go to daily. With a daily candlestick, what are you seeing? Now, on my daily candlesticks, I am now showing you very clearly. This is the lowest point for the monthly. Okay, then I am already seeing this level also where buyers are already playing some funny, interesting games. Then I am seeing a red candle here. This level has not been reached. Now, what is going to happen? If I am going to take a trade on a higher time frame, the traditional style of taking a higher time frame trade, I will be taking a trade from maybe around here, entering this candle and putting a stop loss below this area. That's what we do. But why should I do that? If the market has shown me that he wants to get down to this area, or it has gotten down to this area, or that is the level in that area, why can't I wait for the market to really give me a sign at this area before I enter? The fear that many traders get into is what they call FOMO. So they want to enter the market here because actually that is also a level. FOMO is fear of missing out. They don't want the market to get in and move when they are not there. They don't want to miss the market. Fear of missing out. So they want to get into the market and give an allowance for a drawdown from this area to this area. And so that becomes a very massive stop loss. So when they enter the market, or if they enter the market and the market is going against them, they just believe that this is the last point in the market. It should not break it. If it breaks it, then it's going against them. But this is massive to risk. This is massive to risk for candlestick traders. Massive to risk. So what do? We don't enter here because if this level you are seeing, if you go, this is a daily candlestick level, okay? Now, if you go to a lower time frame, you are going to see another thing. Let's go to H4. Now, what do you see in H4? The same level we drew here in H4, we are seeing that the market rejections below that. So the whole of this zone is important. So this is what you have in H4. So under H4, you are seeing details. You are seeing details that this area is very important. But despite that, we can see rejections. So I will not stay there. Let's go to another lower time frame, H1. Now, what do you see in H1? The H4, you were seeing rejection. On H1, rejection was around here. On H1, you are seeing candles. You see that now? So it's getting more clearer. You're having more details. So in reducing your drawdown, go to a very lower time frame. I think the challenge is you don't even know which candle to be looking for in a lower time frame. Now, of course, I won't give you all of that. I reserve all of that for my students. Okay. But I'm telling you, the lower you go, the better for you. Don't get deceived that the lower time frame candles is just a mere noise. It is not. I repeat, it is not. That you don't know how to use it doesn't mean it is false or is not valid. Don't find yourself arguing blindly or criticizing what you don't know. For me, I think a very good attitude is if someone says something is a possibility, if I do not know it, I go to learn it. Rather than saying it is not possible, it's not possible, it is this, it is this. But I have seen a lot of traders online speaking as authority. They speak as though they created the market. What they don't know how to do, they conclude it is not possible. No, don't do that. Where your knowledge ends is where somebody's knowledge begins. Don't let the market make a fool of you. So you see, in a higher time frame, you are seeing weeks, but in a lower time frame, you can see a proper, now look at it here. Why will you now enter from this area when you can enter from this area? Here, you can see a proper double bottom in H1. Now, if you go to another lower time frame, you will see it even more clearer. Always learn to zoom in. Pay attention to details. Don't believe. Now, the only type of candles I do not analyze this way are those type of candles where you see the one you see in synthetic boom and crash. You know very well at a certain type or a level of candles, they are not, those ones are not candles. They are just, how do they call it? They are ticks. It doesn't form proper candle. A proper candle will form with an opening. The close, you will see it. The body, you will see it. And the wicks, you will see it. You will see the proper candle formation like this. But if you cannot see proper candle formation like this, if you cannot see candle forming like this, then the candle is not properly forming. So boom and crash is not going to be like that. You trade boom and crash using a particular time frame like 15 minutes where you can see a proper candlestick formation. So rather than entering the market from this area on a higher time frame, why don't you enter the market from this area on a higher time frame and put your stop loss probably below this area? You can see that rather than entering from here and put your stop loss from here or put your stop loss here. So this is how you can minimize your drawdown and have a very small SL, the stop loss. So even if the market is going to take you out, you know you are being taken out with a very small loss. And that is why many argue that what we do, the type of risk to reward that we have is not possible. If our stop loss is small, why will our risk to reward not be massive? If you are using a stop loss of 30 pips and I'm using a stop loss of 10 pips, so, and where your take profit is where my take profit is. If your take profit is risk to reward, if your take profit is risk to reward 1 to 4, surely mine is going to be 1 to 10. Or 1 to 12, because what you are risking is times 3 of what I am risking. I think I will do another video to help you guys and give you more information about this. But with what I've just given you as an explanation here this morning, might help you. And like I said, I might take this video down very fast because this is a privileged information reserved for the students of candlesticks. Because even when you have zoomed in very well, which candle are you going to enter from? That is for the privileged people. Thank you very much, guys. I hope for many of you who already have basic or advanced trading, you will understand what I've just said here. But my advice for you is don't argue with what you don't know. Don't criticize what you don't know. Where your knowledge ends is where another person's own begins. And don't talk as though you created the market. You did not create the market. Every one of us, we are learning. And someone says, a wise man says, if you stop learning, you will start dying. Thank you very much. Subscribe to the channel, share the video, like the video, and share your comment. Thank you, and God bless you.